The top business stories live from the Sky News City studio. The Chancellor says he wants to scrap national insurance but admits it won't be happening anytime soon. The FTSE's biggest company, AstraZeneca, to invest £650 million in Liverpool and Cambridge.
These investments are a vote of confidence. There's more to do, but we see the UK moving in the right direction.
Plus, Virgin Money agrees to be taken over by Nationwide Building Society in a £2.9 billion deal. Good morning, this is Business Live with me, Ian King. Nearly 24 hours after his speech, the Chancellor has been defending his budget this morning, insisting it will grow the economy and leave households better off. There are no big surprises on the day, but the pre-flagged cut in national insurance has caused a stir, with Jeremy Hunt saying he wants to completely abolish the levy in the long run, but also admitting it would not be happening anytime soon. But in the last hour, the Institute for Fiscal Studies has given its own analysis of the budget, saying it won't change very much. Well, joining me now is Sandra Horsfield, Senior Financial Markets Economist at Investec. Sandra, good to see you. I mean, the point the IFS is making this morning is one you've made in a note to your clients overnight, which is that the cost of the budget, it's only £6.4 billion in 28-29, which is nothing in the context of a £2.25 trillion economy.
Yes, that's right. On the surface, it's not very much money, but we had not that much money to play with to begin with. I think the difficulty is we're still in a situation where taxes are high to begin with. The economy hasn't grown much, so there isn't much of the growth spending room from that. And in that, delivering tax cuts, there's only so much room for what can be done.
I mean, you make the point in your note to clients that the forecasts for public spending look unrealistic. Why do you say that?
The difficulty is that we don't have the details of exactly how much the spending cuts will have to happen in those parts of spending that are protected. If in aggregate terms we're getting only a small increase, and we know that certain parts of the budget, like the NHS, are protected from those cuts, other parts will have to see substantial cuts, but we don't know where the axe will have to fall to make the books balance in the long run.
And obviously, the Chancellor's headroom is dictated by the Office for Budget Responsibility, but its forecasts are wrong from the get-go because they're assuming that the Chancellor will restore fuel duty to its levels. No Chancellor's put up fuel duty since 2011.
It's a very difficult one because the OBR has got to work on the basis of what the government has publicly announced. They can have discussions about whether certain things are more likely or not, certainly behind closed doors, but they do need to factor in what is announced. And for the time being, that does remain the official policy, at least.
Yeah, it's very hard for the OBR, we should say in passing there. Now, I mean, there is speculation that there will be a third fiscal event before the general election. What needs to change between now and then for the Chancellor to have additional headroom? I guess it's for the economy to grow more rapidly than we expect.
Certainly, a faster economic growth means more tax take and therefore more room to play with. That is certainly going to be something he's hoping for. The other factor is perhaps if we get even lower inflation, where to be even lower than priced in, that would help. If interest rates come down, that means less money to be spent on debt servicing. Again, that frees up more resources. So a mix of all of the above and perhaps a general boost to more sentiment will be what the Chancellor is hoping for.
Yeah, but I mean, inflation, is that really likely? I mean, sure, everyone thinks inflation is going to come to the bank's 2% target in the near future, but even the bank itself has inflation rising in the second half of the year.
Yes, I think in the near term, we're quite optimistic. We could see below 2% inflation, something we haven't had for quite some time now. The reasons for that are, in particular, energy prices. We've had natural gas prices continuing to fall. That will put more downward pressure on utility price inflation and will help in that sense. And indirectly as well, it's an important input, of course, to production in many sectors. So that's one factor. Goods price inflation, we have China doing quite badly and trying to export its way out of this again. So there are certain factors on goods prices that are also pulling down inflation. All of that should be helpful, at least for some time to come.
Now, all chancellors make great play of the fact that they're going to stick to their fiscal rules, although seldom do they do so. I mean, in Gordon Brown's case, he just changed the rules and came up with some new ones. Why do we care about fiscal rules?
Fiscal rules are important in a conceptual sense. It's very hard to say one particular fiscal rule is the gold standard. We need to stick to that. They are indeed being tweaked. But we do need to signal that there is a long-term credible plan. Markets need to see that. We had that experience under the previous Chancellor. The markets didn't believe the fiscal metrics and what was being set out. That's not a repeat that we can afford this time around.
Absolutely. Sandra, it's great to have you in the studio today. Thank you.
Thank you.
Now, there weren't many specific business measures in yesterday's budget, but one eye-catching announcement was that AstraZeneca is to invest a further £650 million in the UK. The FTSE 100's biggest company will invest £450 million to research, develop and manufacture vaccines in Speke on Merseyside. A further £200 million will go on expanding AZ's presence in Cambridge, where 1,000 people will work alongside its existing £1.1 billion Global Research and Development Discovery Centre, which already hosts 2,300 researchers and scientists. I've been speaking with AstraZeneca's UK President, Tom Keithroach.
It's a very positive day for manufacturing and for life sciences in the UK. We already have a vaccine manufacturing facility here in Speke, where I am now. And actually, this Northwestern corridor is the home of vaccines, research, development and manufacturing in the UK. So it was a logical place for us to partner with the UK government to build a new strategic hub to develop the medicines of the future to protect the UK against future pandemics.
Now, this time last year, your CEO, Sir Pascal Soriot, was citing a new factory in Ireland, and he said UK taxes were discouraging. What has changed?
Yeah, well, Ian, look, I think I would say that the UK has had a deep historical strength in life sciences. It's been one of the leading countries in the world. But over the last 4 or 5 years, international competitiveness for R&D investment and manufacturing, actually particularly since the pandemic, has become particularly fierce and is moving extremely fast. What we have seen over the last 18 months, working with government, is really 3 changes that we take as positive signals of a return of the UK environment to competitiveness when it relates to life sciences investment. Firstly, there's been a really significant rebound in clinical trial activity with the NHS, supported by government and the MHRA. That's crucial to our ability to develop medicines in the UK and bring them to patients. You will have seen that in the autumn statement last year, the Chancellor introduced permanent capital expensing for tax deduction purposes. For a very capital-intensive industry like ours, investing in the UK, that's extremely important. And also, the day before the autumn statement last year, the industry and the government came to a new deal which will bring the rebates that the Department of Health require of the pharmaceutical industry back in line with our international competitors. So although the corporate tax rate hasn't changed, overall, we take those as a very positive signal in the evolution of the environment. And these investments are a vote of confidence. There's more to do, but that we see the UK moving in the right direction.
Now, you're also expanding in Cambridge. That was the other big part of the announcement yesterday. Were there any other locations that you looked at for this particular activity?
No, actually, the South site we already own. And building on the momentum that we have with our R&D centre, we have 2,300 scientists in Cambridge now. It's the largest biosciences cluster in all of Europe. And collaboration is extremely important to the work that we do. So opening up the South site now to accommodate 1,000 more people really was the logical place to place that investment.
Now, prior to the pandemic, vaccines was not one of the traditional strengths of AZ. It wasn't one of your key therapy areas. Does this investment in Speke really underline the fact that this is now an extra leg to the business?
Yeah, we hadn't historically been in vaccines, although we do, through this plant, supply what is the largest childhood flu vaccination programme in the world. If you've got kids at primary or secondary schools, the likelihood is they take an AstraZeneca vaccine to protect them through the winter. We're a company that's very committed to addressing some of the most challenging diseases on Earth, in cancer, in cardiovascular, respiratory, and also in rare diseases. But you can take this investment here as a signal that we have added vaccines and immune therapies to our portfolio to help the UK and other countries protect themselves from future pandemics.
And in terms of the employment at Speak going forward, once this facility's up and running, how will employment there break down between straightforward manufacturing and R&D?
Yeah, we actually support 9,000 jobs in the UK right now across 4 strategic hubs, one of which is in Speak. And we support more than 100,000 jobs in the broader life sciences ecosystem. Right now, we have 400 members of staff here, some of whom you can see working behind me. And we would expect that once the £450 million new manufacturing plant is completed here, that number would look more like 500. But obviously, we'll support far more jobs in the local community and in the North West Corridor more broadly.
Some other stories for you now. It's a really busy day for corporate news today. Virgin Money has agreed to a takeover by Nationwide Building Society, valuing it at £2.9 billion. The takeover of Virgin Money, which is the UK's 6th largest retail bank by total assets, would create a combined group with total assets of approximately £366.3 billion and total lending and advances of approximately £283.5 billion. Well, Nationwide, which would remain a building society following the takeover, said the deal would make it the second largest provider of mortgages and savings in the UK. It proposes to fund the acquisition from its existing cash resources. Shares of Aviva rose by more than 3% this morning after the insurance giant reported better than expected annual results and announced a £300 million share buyback. The UK's largest diversified insurer reported an operating profit of £1.47 billion for 2023, which was up 9% on 2022, and said it was targeting a figure of £2 billion by 2026. Aviva, which now has more than 19 million customers, said its general insurance business had performed well, considering adverse weather in Canada, storms in the UK and the impacts of inflation, reinsurance costs and higher claims frequency. The FTSE 100 aircraft engineering group Melrose said today it expects profits this year to be better than expected. The company, which makes components for aircraft engines and whose airframe technology and electrical distribution systems are found on most modern aircraft, said this would be due to stronger sales growth in engines in particular. Operating profits for 2023 came in at £420 million. That was up from £186 million in 2022. Shares of Entain fell by more than 3% this morning after the betting and gaming group warned that tougher regulation in the UK and the Netherlands could hit earnings growth this year. The company, whose brands include Ladbrokes, Corals, Gala Bingo and Party Poker, highlighted stake caps in online slot games in the UK as a particular headwind. Underlying operating profits for 2023 came in at £641.8 million, which was up 18% on 2022. And ITV revealed this morning it's in the early stages of a new strategic restructuring and efficiency programme aimed at cutting costs and growing profits. News sent shares of ITV, which said the recent Mr Vates versus the Post Office was its biggest new drama in more than a decade, up 5%. Well, ITV was reporting a 32% drop in underlying operating profits for 2023 to £404 million, which it said reflected a decline in TV advertising and its investment in the ITVX streaming service. Well, last night's gains on Wall Street were followed by declines for equities overnight in the Asia-Pacific region. Only Sydney bucked the trend. In Europe this morning, well, stocks have been relatively trading to the upside. They're only the DAX in Germany trading to the downside, and that looks more or less unchanged right now. Talking points today include the Scandinavian carrier SAS. That's down 22% in Stockholm on a downbeat trading update. Well, here in London, busy old day. Lots of FTSE companies reporting. FTSE's off 1/5%. Gains for some healthcare stocks are being balanced out by losses elsewhere. A leading FTSE gainer in percentage terms just now is Rentokil Initial. The share's up more than 15.5%. Results have come in ahead of expectations. As I say, it's a huge day for company results, 7 in the FTSE 100 alone. The thermal solutions specialist Spirax Sarco, that is another gainer today, currently up nearly 6.5%. To the downside, Entain, mentioned them a moment ago, they have been down as much as 8.75% this morning. Outside the FTSE, again, lots of company results there to digest. The cybersecurity group Darktrace is ahead by 15%. That's after it predicted sales growth this year of up to 25%, while the industrial threads group Coates is up 8.75% on a trading update. Meanwhile, the North Sea oil and gas producer Harbour Energy is down by 1.5%. That's after most of this year's profits were wiped out by the government's windfall taxes on the sector. You've had a good look at the currency markets there. Well, I've been talking you through some of these mid-cap movers. Sterling up nearly 1/5 of 1% against the dollar. It's up by nearly 1/4 of 1% against the euro. Single currency, meanwhile, more or less unchanged against the greenback. As for the oil price, well, it's given back a chunk of the gains that it notched up yesterday. Barrel of Brent crude will currently set you back $82.31 a barrel. That's down a little over 3/4 of 1%. But joining me this morning is Sophie Lund-Yates, lead equity analyst, of course, at Hargreaves Lansdown. Sophie, good to see you this morning. Blockbuster deal in the banking sector today. Virgin Money, the latest mid-cap to be taken out.
Yes, hi, Ian. This is really the big one today, isn't it? And I think particularly from Virgin Money's perspective, you know, the amount being offered here by Nationwide represents about a 38% premium, looking at the share price there. So that's certainly good news for the shareholders there. And as you're alluding to, I think really more broadly what this is suggesting is in the mid to smaller areas of the banking sector in the UK, I think we could actually be looking at more consolidation in the short to medium term, which is an incredibly interesting development.
Yeah, I know Virgin Money's management have been very, very frustrated at the share price performance. Is this them throwing in the towel?
I wouldn't necessarily say it's giving up. I think it's probably a recognition that this is a really good outcome for their shareholders. And also, you know, they're not alone in that. We know that more broadly, the UK financial big names, you know, valuation-wise, they are really struggling. They're quite an unloved sector at the moment. That does represent some challenges, but is that overblown in some corners? I personally think so.
OK. Well, looking at some of the companies reporting today, Aviva, I mean, it's one of the most commonly held stocks in the market today. I imagine a lot of your clients are quite interested in this one.
There's certainly a lot about Aviva that shareholders like, particularly retail clients, as you're alluding to there. And one thing that they will be looking forward to, as announced today, is that £300 million buyback, which is pretty significant. You know, the results really were very robust, that 9% increase in operating profit. And something that I actually think is really quite interesting is their health business has done really, really well. And actually, we can conflate that and looking at the fact that the NHS waiting time situation is actually feeding into that. And of course, Aviva's this very diversified offering. So some really strong results. Good
to hear. What about ITV? I mean, they're trying everything they can to sort of generate interest. But yes, the stock price just, well, it's up today, but it's by and large gone nowhere for years.
Absolutely. I mean, we have seen a bounce today, you know, between 6 and 7%, which isn't to be sniffed at. But as you're saying, on the long-term view, things have been really, really very difficult. And that is because, of course, they rely heavily on traditional advertising revenues, and that is a really tough market to be in. The reason the market's so happy this morning is because they are really grasping the nettle. They're trying to slash costs to try and protect margins so that they can invest in growth opportunities, particularly in more digital spaces. That is all the right thing to do, but you can't cut costs forever. So at some point, we do need to see profits moving in the opposite direction.
I mean, they've got a terrific studios arm, which they've obviously tried to talk up. I mean, you know, the Mr. Bates drama has just put it in the shop window again. Why don't investors sort of latch onto that more, do you think?
Yeah, sure. The studios business is phenomenal, particularly when you look at the likes of the streaming giants. Content is needed now more than ever before. So it's a great corner of the market to be in. One of the reasons it's not potentially reversing people's sentiment towards the stock is that as much as it is a great asset, you're never going to see blockbuster margins, for example, from running a studios. So that is one area that I would say is potentially a negative.
Yeah, Sophie, got to leave it there, I'm afraid. Good to see you as ever this morning. Thanks. You. Bit of breaking news to bring you. I was just talking with Sophie about Mr. Bates versus the Post Office. We've had a response from the Post Office in the last few minutes to calls from MPs this morning to remove it from compensation schemes linked to the Horizon IT scandal. A spokesperson for the Post Office has told Sky News the Post Office welcomes the direction of this report into speeding redress for one of the worst miscarriages of justice in British history, and we will study its recommendations carefully. While £179 million has been delivered in redress to victims of this scandal and settlements reached with 2,700 postmasters, more needs needs to be done. Post Office would have no objection to relinquishing our role in administering redress. Whatever is decided, we will continue to work with Government, Parliament and the Independent Advisory Board to do everything possible to speed up justice and redress for victims of this terrible scandal. Sounds like they're pretty much in agreement with the MPs, according to that statement. I guess we'll have more reaction to that throughout the morning here on Sky News. In the meantime, still to come on Business Live, the Lloyd's of London insurer Beazley has reported record profits. I'll be speaking next to the CEO. Don't go anywhere.
Slide Emirates, slide better. Fly Emirates, fly better.
Thank you.
Welcome back. The Lloyd's of London insurer Beazley has reported record profits on the back of what it called a standout year for property insurance in particular. The company, which last year became the first insurance company to launch a cyber catastrophe bond, saw full-year pre-tax profits surge from $584 million in 2022 to $1.26 billion in 2023. Joining me now, I'm pleased to say, is Adrian Cox, Chief Executive of Beazley. Adrian, welcome to you. Property risk premiums were up 64% during the year. Is that kind of growth sustainable?
I think the growth in our property book is sustainable. I'm not sure it's going to be at the same rate that we enjoyed in 2023, but I do think in an era of climate change, property insurance is increasingly good for a specialty insurer like us. So I do think there are prospects over the next 5-10 years, yes.
Now, I mentioned what you've been doing in cyber risk over the last 12 months. What have claims been like?
So cyber crime worldwide has been increasing. Reports around the world suggest that it's been going up between 25 and 33%, having gone down in 2022. But cyber crime for our clients has been static this year. I think we're very focused on risk controls and risk management, and I think that had an impact for us and our clients. So our frequency was stable, which is a good thing.
Now, one of your speciality lines is D&O insurance, which is directors and officers liability insurance. You say in the statement today you've been pulling back there. Why is that?
Because the market's been softening quite dramatically over the last couple of years. Demand had been increasing for directors and officers insurance. That was until the financial markets really shut after Russia invaded Ukraine, which caused a bit of a demand shock. And prices have been coming down quite aggressively since then. So we've had to take some risk off the table, unfortunately.
Now, there's a really interesting line, I thought, in the statement where you say the geopolitical certainties that have persisted for much of the last 80 years have shifted. What do you mean by that? And what does it say about the changing nature of risk?
I think we live in an era of accelerating risk, right? The world is getting a bit more complicated. It's more connected than it's ever been. Technology is changing fast. Climate change is changing, and geopolitical landscape is changing fast. And that all presents more risks for our clients, and it means that we're in a position to be able to help them more.
You've been doing a lot, though, to incorporate climate change into your risk assessments. Is that easy to do?
Yeah, so as a specialty insurer, we're sort of primed to think about risks that are changing. And property risk is now just an example of that. You know, you mentioned D&O insurance 30 seconds ago. The sorts of things that companies are being sued for now are very different to what they were 20 years ago. And the same thing is now true for property. The sort of risks that our clients face for assets around the world now are different to what they were because of changing weather patterns, and will be different in the future. And we're the sort of company that likes to think about that sort of thing and help our clients do the same.
Now, Aviva have just announced they're returning to the Lloyd's market in from 24 years. What do you make of that?
I think it's a great sign of confidence in the Lloyd's market and in the London markets. You know, London remains one of the great hubs for specialty insurance around the world. It's grown very successfully over the last few years, as have we. And I think it's great to be able to show that the London market is alive and kicking and thriving for the future.
Yeah, big vote of confidence in the Lloyd's market. Adrian, we have to leave it there, I'm afraid. I'm sorry we've been so pushed for time today, but it's good to see you as ever. Thank you.
Thank you for your time.
That's it from me for the time being. I will, of course, be back at 4:30 with the afternoon edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned after this short break. Jane Secker will be with you. Lots more reaction to yesterday's budget and, of course, the latest reaction we've had from the Post Office to the big MP's report today. See you later. Thanks for joining me today. Cheerio.